With AI workloads driving unprecedented demand for reliable carbon-free electricity, how do you see nuclear power, particularly baseload generation, fitting into the power stack for AI data centers?
Yeah, that's a good question, Adam. So I think what we see is bigger picture. We just see electricity demand growing and growing every year for a long period of time. That's a big switch from the last 20 years when we've had no electricity demand growth effectively in the U.S. It's been fairly stagnant. Now we've got a lot of electricity demand growth. So we're going to need an all of the above approach. So how does nuclear fit? Well, nuclear will be a significant component. Now we think that will be in 2030 and beyond. And in the short term, in the near term, natural gas will actually be the biggest benefactor of increased electricity demand because natural gas is available now and it's ready to generate a lot more electricity. And as you know, AI needs electricity now.
Is there a timeline that, as an investor, I might want to consider both for nat gas and then eventually nuclear?
Well, I like I said, if you're looking who benefits from electricity demand today? A lot of the natural gas value chain, the infrastructure, the electricity generators that use natural gas to generate electricity benefit. In the next several years, though, we're going to see advancements in nuclear technologies, new nuclear facilities or old nuclear facilities come back online, and they'll benefit. And those facilities will probably come online in the late, probably early 2030s, let's say. And so the timeline would be natural gas now, nuclear a little bit later.
I want to ask you about small modular reactors, but before we go there, are the major hyperscalers, are they showing any sign of maybe investing directly into nuclear capacity? Because we're still roughly 7-8 years out from those starting power.
Yeah, well, you've seen some of the hyperscalers look at basically 3 Mile Island and some of these large-scale nuclear facilities that have been offline for years, bringing those back and generating nuclear energy. So yeah, it's something that absolutely the hyperscalers are looking for. Of course, the hyperscalers recognize this challenge with electricity, and really probably the thing that will determine how fast AI can develop won't be the technology; it'll be the pace of electricity generation and how quickly electricity generation can ramp up to meet AI technology.
Are we on a trajectory to meet AI technology, or are we already falling behind? Are we ahead of the 8 ball?
I think so far so good, but the electricity generation and the energy sector, electricity generation is going to have to speed things up, and in the next several years, because we're definitely going to see really a step change in electricity generation and the need for higher electricity generation really starting in 2026, 2027 timeframe.
So what about the small modular reactors? What's your view on the commercial timeline and viability for small modular reactors? They're getting a lot of attention.
Yeah, they sure are. And you know what? There's a lot of really intelligent people looking at these things. So the one thing you have to remember, Adam, when you look at small modular nuclear reactors is there are 0 of them operating in the U.S. So they're a new technology. They used enriched uranium. They use a higher concentration of enriched uranium than just the traditional large-scale nuclear reactors. I go into that for this reason. The Nuclear Regulatory Commission, which is the oversight body for the whole nuclear energy industry, will likely want to make sure that these small modular nuclear reactor technologies, obviously can be commercially operated, but they're safe and keep the public safe as well. And so I think it will take a little bit longer than maybe what people anticipate to get these small modular nuclear reactors up and running. But they're exciting from an opportunity of generating a lot of electricity with a small, in a small space. So we'll see how it develops.
So what's the biggest hurdle? I mean, regulatory or permitting? What are the roadblocks that could delay their deployment here in the States or in Europe?
Well, the way we look at it, Adam, is across the value chain. So you have to look at, okay, so where are you going to get the enriched uranium? Do you know where we get the enriched uranium today? A lot of it comes from Russia and China, right? And so the U.S. needs to build its own enriched uranium value chain. We need to produce more uranium in the U.S. And then we need to enrich that uranium in the U.S. And then that will be available for these small modular nuclear reactors and others as well. So really, and from my perspective, all of this needs to work together. It's more the value chain rather than just the permitting.
When we talk about enriching uranium, forgive my ignorance, correct me, because I know the people watching will want to know. I thought we enriched uranium, was it Savannah or in Georgia? Didn't we used to do that? Are there private companies in the U.S. that enrich uranium, or has it always been a government entity?
There's one enrichment uranium facility in the U.S. right now, and there's one company. And so that's part of this executive order is, and what it's designed to do is increase the production of uranium in the U.S., increase the number of uranium enrichment facilities in the U.S. And so over the next several years, we'll see how that develops. But that's the development of the supply chain is going to be really important in the development of nuclear technologies.
If I don't know if you can talk specifically to this, but as an investor, if I were looking to perhaps make a short-term or even long-term investment in the enrichment side of uranium, where should I be looking? Who's the company? Is it just one company?
Yeah, no, there's one. The fortunate thing is it is public. The ticker symbol's LEU. I believe I think I'm pronouncing it right, Centrus. But it's a ticker symbol LEU. It's I think about $1 billion market cap, but it's the one opportunity that investors can invest directly in an U.S. based uranium enrichment facility.
Are there any overseas that you would want people I'm not asking you to make a call, but these are the others who are doing it that we should look at?
Not necessarily that enriched uranium. A name that a lot of people invest in when you're looking for uranium production is just north of the border called Cameco or Cameco. CCJ is the ticker symbol. It's actually a Canadian-based company, but it produces a lot of uranium in Canada, and then obviously that comes here to the U.S. and other places around the world as well.
So, assuming nuclear energy adoption scales meaningfully over the next 10 years. Are there third-party beneficiaries that investors that we should pay attention to? I mean, we just went directly to the fuel side of this, but what else should we be looking at?
Well, the electric generation companies that are generating electricity, obviously, they're going to benefit from higher volumes because of AI demand. So think about it like Constellation Energy Group. CEG is the ticker symbol. Constellation is the largest nuclear operator in the U.S. And so obviously that particular company is going to benefit from more production of nuclear facilities and more nuclear production in general as once again electricity demand continues to grow. They'll benefit from natural gas demand growth too as a result of electricity, the need for more electricity as well. But a company like Constellation is one of the biggest, will be a benefactor on the electricity generation side.
What about our grid infrastructure? I can recall just a few years ago, there was the doom and gloom. The U.S. grid is going to collapse. Where do we stand on the rebuild of that? And how could I, as an investor, maybe get in on that?
Yeah, so there's where you might want to invest in some of the transmission and distribution, right? So the electric lines, like the transmission lines, whether they're above ground, which you probably can see if you drive along the highway or in your neighborhood, or a lot of them now are below the ground. So there's a lot of different ways to play that. There's the construction companies like Qantas that actually builds the electricity lines and does a lot of the work behind the scenes in the transmission and distribution sector. There's companies like AEP, that's an electric utility that owns a lot of transmission lines in these core regions where you're seeing a lot of data centers being built as well. Texas is another area. Companies like NRG, Centerpoint. Once again, all these companies, what are they doing? They're generating the electricity for these data centers, and that's really what's going to drive demand going forward.
Let's go old school here, because I'm a guy who loves a V8 engine and I love oil. Do you see any kind of play with oil, especially now that the Saudis are trying to perhaps cut back on U.S., hurt our shale production? Where do you see this all going after what we saw with OPEC recently?
Well, as we look forward, Adam, and we just look at the broad energy sector, we think the sector is being redefined. We think that natural gas actually is going to begin to take the lead and the leadership role in the development of future energy demand. Now, oil not going away. To your point, oil demand, and we think oil demand growth will slow, but it's not going away. As you highlight, oil is still the largest global energy supply source of any of the commodities. Not a lot of people still realize that, but it still is. But the growth in oil demand is probably going to slow. We think the growth in natural gas demand will likely continue to rise at a fairly steady pace.
So help me here. If I am a risk-loving investor, is uranium greater risk, perhaps, what we were talking about earlier than, say, good old-fashioned oil, or should I be looking at the other way around?
Well, if you're a risk, so if you look at the stocks, there are a few of these small modular nuclear reactors that are highly volatile stocks. They're once again in the development stage. But a company like Oklo, right? You probably OKLO. So some of your viewers probably know this name. It's a highly volatile stock, but if you believe in small modular nuclear reactors, they're going to probably lead the way as far as the development of those. That's a lot more risky than an old oil company, right? Because the oil companies mature assets, generating a lot of cash flow, and they're paying that cash flow back to the shareholders in the form of dividends. So compared to Oklo, new technology, we'll see where it goes. But if you believe in it, it's going to have a lot of cash flow, but it has zero now, but might have a lot more in the future.
Okay, so we just did the old Goldilocks, too hot, too cold, just right. It sounds to me like right now, short term, nat gas is the way to go. And even though I live in a state that was trying to get people to stop using nat gas in New York, I'm expecting that to be a complete reversal with the current federal administration. But also here in New York State, I think the blowback from citizens is like, no, we want our nat gas. Am I correct that would be the sweet center for an
natural gas is the sweet spot right now, and we think it will be for quite a few decades, Adam. It's first of all, we've got a lot of it, so it's affordable. It's actually cleaner than coal, and so and it's abundant. So for all of these reasons, we just think that natural gas is available now. It's a low cost form of energy. It's a high efficiency form of energy, and like I said, maybe a lower carbon form of energy as well, especially relative to coal. So you put all those together, it's really hard to compete with natural gas, and so we see natural gas as once again really leading the energy sector going forward here for the next several decades.
If you were 25 years old and you had $10,000 and you had just listened to this conversation, how would you allocate that 10,000?
Oh gosh, that's a good question. Boy, if I was 25 years old, where would I put it? Well, I would probably spread it. I would probably spread it along the natural gas producers. Companies like an EQT and Coterra are good examples of that. So I'd probably put at least 25% in natural gas producers. I'd probably put another 50% in natural gas infrastructure companies because I really like those companies. I think they're undervalued. Which leaves me about another 20%. I'd probably put 5 or 10% in some of these electric utilities, and then I would dabble a little bit in these small modular nuclear reactors, recognizing that it's going to take a little while for them to generate cash flow, but they probably have a future beyond 2030.